what I look for when I screen for stocks is sure I have a filter for very undervalued stuff, but what I am looking for is there an element of growth that the market is missing? And that is something, well, in the stock that we're going to be covering today, Creek and River, was one example of that.
Welcome. Today we have Alan from Continuous Compounding, a Substack focused on, I think, value stocks. It's been a lot focused on Japanese equities, and he's had a very good track record. And today we're going to talk about a Japanese company called Creek and River, 4763JP, which is started as an agency business and has performed extremely well, yet trades at 7 times PE. I think that's the short of it. Quick disclaimer first, this is for informational purposes only. It is not financial advice. Do your own research, talk to a financial advisor. And as of 20th of August 2026, I personally do not own Creek and River, but Alan here does. So thank you so much for joining, Alan. And perhaps you can talk about who you are, where you come from, and your current focus.
Yeah, sure. So hi everyone, I'm Alan from Continuous Compounding. Yeah, I am based in Vancouver, BC, Canada. I started off my career in a more traditional route, and then later on, I went on a more unconventional path. I first went to business school, studied finance at UBC, which is a university in Canada. After graduating, I had a role around 3 to 4 years. I worked in equity research on a consumers team, covering casinos and gaming, tobacco and alcohol, and adult leisure facilities. So the running joke in the consumers team was I was the non-ESG analyst of the team, and that they should just give me cannabis as well, and that would even propel me further into that title. From that role, I learned a lot of valuable financial modeling skills. And then by around year 2, I felt that I had grown quite a bit at the firm, and I was looking for ways to further grow my valuation skills. And it was around this time that I stumbled upon another well-known X account or investor known in the FinTwit community called Jeremy Raper. I listened to his podcast. I like to go on walks and listen to podcasts, and he was featured on yet another value pod, who a lot of you know is hosted by Andrew Walker. And I think this was around 2021. He was the most visited guest on that pod, and every time he had a podcast, I would just learn so much from how he analyzed the stock, how he broke it down, and I thought that was really cool. So I decided to reverse engineer his pitch on Shinnikin Group, because I thought it was very interesting. And I printed out, I did an old fashioned printout of all of Shinnikin's filings. And during as I was reading it, there's one thing that went out at me, which was Shinnikin Group is a company that buys land for salarymen and then builds a building and helps them manage the property. And they would specifically pick properties that were within a 10-minute walking distance to a nearest station. And having gone to Japan in 2019, I knew the struggles of booking an Airbnb or a hotel. So I knew, and walking 15 to 25,000 steps every single day. So being close to a station is extremely important. I basically relayed my own knowledge of the stock onto the stock, and it made me realize their property management income is super, super safe because number one, it's COVID. Number two, everyone wants to be close to the station. And I looked at the occupancy rates; they're 98%, only 2% vacancy. So I was well, the multiple that they're ascribing to this company was also in the low single digits. I was this one segment of the entire company is worth more than 2/3 of this entire market cap. So you're getting all the rest of the company completely for free. So the intrinsic value of the stock at the time was worth 3 times what the market cap was. So during this period of time, I was in the zone. I was like this is the type of valuation that I truly enjoy. So in the back of my mind, I was like, this is something I really want to do in the future. So going back to the career path, so this is around like the third or fourth year of me working at this firm. At the time, the company was understaffed. My team was understaffed. They had made a promise to hire more people. There were other senior analysts like me who, due to the working conditions or let's say the compensation, decided to switch firms, and the company wasn't really doing much to like retain the talent. And so unfortunately, during this period of time, I developed some like chronic muscle pains, one in my left thumb, one in my right forearm. And yeah, at a quarterly meeting with the CEO, this is like in company wide, the CEO basically says it's like an open discussion, is like a town hall type of thing. So I was a little bit fed up. So then I asked the CEO, word for word, when was the last time you guys reviewed the compensation strategy? And what are you doing to retain and attract talent? Yeah, safe to say that I ruffled some feathers. But behind closed doors, like people were DMing me in support. Um, yeah. So essentially, by being brutally honest, yeah, later on, I realized why they weren't increasing the comp. It's because they're on undergoing like an acquisition process, so they're not capable of like actually increasing any of the salaries for anybody. So the company got acquired, and I was unfortunately laid off. Even though I had like a stellar performance review prior to that. And so I was at a crossroads. Do I continue the finance path and apply to like a finance job? Or do I, because in the back of my mind, being inspired by Jordan Maper, do I go out on my own to start something on my own? Um, and this experience was kind of enlightening to me in that, my parents say, "Oh, work a job; it is safe, right?" But then at the end of the day, unless you have like stock options, a lot of them, or a lot of shares in the company, like your sacrifices for the firm kind of just help the shareholders, and it just felt like I was 100% disposable as an employee. So I came to the revelation that if I go back to the finance path and I'm working 100 hours for someone else, what could I accomplish if I worked 100 hours for myself and build equity for myself in my own business? And at that time, I was around 27. So I thought, well, I'm still young. I don't have a partner yet. So before the responsibilities of life pile on, I should take this risk on myself. So yeah, that's what led to the launch of continuous compounding. Because yeah, I just really enjoyed the investment process. Actually, one of my long-term goals for myself is to at one point become a portfolio manager. And so, yeah, I thought there's many ways to get to that path. I thought that if I do this continuous compounding, a Substack, that I'm actually on a day-to-day basis, am doing what like a PM does in terms of the stock selection portion. And because I am investing my own money, I'm also doing like the portfolio management side. So yeah, I just thought that I'm not it like it looks very risky. Everyone around me, it's like, ooh, that sounds like a pretty big risk to do. But for me, it's something I'm very passionate about. I really enjoy looking for asymmetric bets. When I was covering the casinos and gaming and those consumer stocks, a lot of them were fairly valued, and so I didn't get the same type of stimulation because these stocks were forced upon me and more fair valued. One thing I like to like say is like something I thought of is like, um, you should let the market pay you to learn about a stock. So when a stock is undervalued enough, in a sense, they're paying you to expand your circle of competence, and they're paying you to look deeper. So that's something like I really enjoy. So yeah, going back to the continuous compounding, the reason for the name is because, well, the most direct reason is because we want to compound our stock portfolios. But I think continuous compounding is something that is in all facets of life. So compounding your knowledge, compounding your relationships, your health, your experiences, and yeah, and then taking from Japanese culture, there's a concept called kaizen, which is like continuous improvement for the pursuit of perfection, but you never really attain it, but that's what you strive to do. So I admire Japanese culture a lot because they, in a lot of fields, they try to, obtain mastery. And that's kind of what I try to do in terms of being a student of investing and improving on a day-to-day basis. So yeah, going back to the continuous compounding part, which is yeah, what I strive to do for continuous compounding is to put in levels of effort to get to a point where I feel that I fully understand a stock better than a majority of the shareholders, and get to a point of research where readers of my Substack can get conviction in making an investment decision. That is what I aim for, and I do feel that my affinity to Japanese culture, you can make your assumptions of what that might mean, leads me to be really, allows me to have the stamina to kind of look deeper than other people and draw different links from a consumer standpoint. And I think that has helped me get to where I am today, which is kind of focusing more on Japanese things. Yeah.
So is it your fascination for Japanese culture that's brought you to Japan, or is it the asymmetry in the risk or the risk reward of stocks listed in Japan?
Yeah, yeah. To bring in like a poker concept, I know not every finance person plays poker, but some people do. It's kind of like how I see it is in the US market, right? There's a lot of grandmasters. There's a lot of IMs and grandmasters. And let's theoretically say I have an ELO rating of 2100, right? Bring another chess analogy. And I'm consistently playing against people who are like 2300 ELO. That's not the best setup. I feel like Japan is a place, if there's a poker table, I'm up against people that are 1000 to 1500 ELO. And myself have like, let's assume 2000 ELO. So from one standpoint is in terms of like just investment knowledge and proficiency, I feel that the Japanese market is in terms of small cap and micro caps is just an arena that is much easier to fish, and there's way more asymmetry because there's less grandmasters looking at these smaller names. Um, yeah, yeah.
How would you define the asymmetry then in the risk reward skew? Like how do you find situations where you can feel confident that there's definitely clear asymmetry?
Okay, okay. Let me try to think of an example from like one of my previous investments.
Are, are there certain metrics that you look more at? I mean, P ratios is one thing,
Mhm,
but
mhm.
obviously, for example, the company we're going to talk about today has had a fantastic, EPS track record,
Yes,
and
yes.
like Oricon, which you spoke about before, clearly has a strong moat.
Mhm,
Um,
mhm.
but how do you think about the, estimating risk reward as a value investor?
Right. Um, One thing I do differently from I think a lot of Japanese investors is a lot of them have a very large basket approach. I mean, I myself also do a little bit of that. But what I look for when I screen for stocks is sure, I have a filter for very undervalued stuff. But what I am looking for is there an element of growth that the market is missing? And that is something, well, in the stock that we're going to be covering today, Creek and River, was one example of that. In the agency business, there's a lot of small cap agency businesses that are specialized where they're building up cash, but they have nowhere to allocate it. So, for one, if we apply that framework to Creek and River, they have excess cash, but they also have a segment called CRES, which we will cover a little bit later, where they help businesses with business succession. And so they have opportunities to actually allocate their excess capital to buy a business. And what that does is that it increases their cash flow, not decreases. So, yeah, you don't in a typical value trap where you just have a company that is cheap, generates cash flow, but the management decides, hey, I'm just going to sit on this cash because just in case there's a rainy day, I have it to so that company will stay alive. And then you have also potential family members that own, a large stake in the company. So they just want stability. They don't really care too much about shareholders. So yeah, I mean, there's a lot of variables that can lead to an undervalued stock or devalued stock to go back to raise valuation. But yeah, what I'm looking for is there a way for them to grow? Is there some opportunity for operating leverage? Is there like a revenue segment that people are underestimating? And is there an opportunity to allocate excess capital? Off the top of my head, that's what I can think of right now. Yeah.
Interesting. Okay.
Mhm.
So let's talk about the underappreciated growth then in Creek and River
Yeah.
4763 JP.
Mhm.
It trades at 7 times PE, has a great balance sheet, 20% return on equity, despite this cash. And the EPS CAGR has been 19%. Uh, and also not so much, not at all dependent on the weak yen. It's been growing domestically, which is, I would say, quite rare in among the stocks I've looked at. Um, let's just start, straight on. What do they do? Like, what's the business model of Creek and River?
Oh, sure. Yeah, we can go over do a quick overview. So yeah, the company started off as an agency business in the early 90s, mainly serving the TV and movie industry. The founder himself was a producer, and he started the company out of his apartment. And the second field that they did afterwards was the medical field. Where they help reallocate physicians to different hospitals. And yeah, so basically the agency business is one where you either you have two revenues. One's a dispatch revenue, which is a client is looking for a temporary worker. So you dispatch employee to that company and you receive a dispatch fee. Then there's a placement fee, which is a client might want a full-time employee. So you would look at your network of potential full-time employees and you send it over and then you charge a variable dispatch fee based off of their salary. Then below agency business, they also have a production business, which is these are project-based businesses. So for example, let's say NHK wants to hire CR to create a new TV show for them. So Creek and River would find in their network, compile a team of a director, a screenwriter, a stage designer, basically all the people required to make a TV show. And then they'd be like, okay, to complete this TV show, it would cost this amount of money. So these are very project based. Some of them are longer, some of them are shorter. So that's the production one. They also do production for gaming. They do production for marketing. There's many different things, and that's yeah. And the third one is a rights management. So they also help owners of IP, so manga artists, webtoon artists, people with maybe I think it was like data. But yeah, basically anyone with IP, they basically their goal is to help them maximize the monetization avenues for monetization for their IP. Um, yeah, so that's a rights management, and then yeah, they have other much smaller ones. But yeah, those are the main three, which is agency, production, and rights management. Yeah.
What about the talent? I mean, what kind of contracts do they have with each of these, you know, creatives, let's say?
Okay. Yeah, it's so they have a professional field called Creative Japan. Creative Japan is a studio under Creek and River that does a lot of like project based work. So, for example, for gaming, there might be a hit title where they'll say, "Hey, we want you to assist us to develop this game." Um, they have so the creators that are for temporary work, I believe these are assumptions. So they have a large network of professionals. I believe they have some for the creative studios. These are full-time hires. These are full-time hires that they are on payroll for Creek and River. And then there's also people that they have pre-screened that are on their network so that when a client says, hey, I need someone to help me shoot an ad, for example, then they could dispatch someone in a moment's notice to do that thing. Or the placement, as I said, to full time work. this does not belong to the Creative Japan Studio. Creative Japan Studio are people who are full-time employees of CR. Is just that because they get enough projects on a rolling basis. So like, let's say you have a 3-month contract to do something. After that 3 months is over, they know that there's going to be a backlog or people coming to them eventually to demand further work, so that that workforce is continue or utilized efficiently. Yeah, over
Mm.
time. They don't really post utilization rates for the firm, but I would imagine for them to hire someone full time, the utilization rate has to be high enough for them for that to make sense. Yeah.
Okay, well, let's go back to the agency and staffing business. What
Mm-hmm.
what is it about it that's like what's the raison d'être? Like why is it necessary to have such a business? Because it's a matching problem, right? You need someone needs talent and they have it or they sit on it.
Mm-hmm.
Can the same service be can the demand be satisfied through gig platforms like Timey or traditional networks like LinkedIn? You know, you just search on LinkedIn for the talent and you find it, or
Mm-hmm.
I mean, the reason I'm wondering is because this business model is a little bit rare. In Hollywood, you do have agencies like CA, but in other markets, like in the medical field, for example, I haven't heard of agency businesses existing outside of Japan or outside CNR. So what do you say to that?
Yeah. Okay. I'm gonna. There's a lot to cover there, so I'm gonna just take notes. Okay, so the first point, if I'm missing anything, I'm gonna have to ask follow-up questions because there's a lot to hit there. For the to address the gig portion, um, so Creek and River has narrowed down its fields in the entire universe of potential jobs in Japan, down to 50 potential professional fields. Now, for them to qualify it as a field that they would be interested in, uh, I don't have this at the top of my head, so I'm gonna have to cheat a little bit here. So it needs to be a profession with expertise that is demanded globally. That's number one. Number two is it cannot be easily replaced by machines or AI. And number three, it's a profession where intellectual property is accumulated. So at no point in time will Creek and River get into like a business where there's food delivery or there's a restaurant needs a dishwasher. Like temporary work for a dishwasher, they won't go into those type of fields. They go into fields where there's some barrier to entry, where someone actually has some specialized expertise like game development, marketing, animation, creating NFTs, even CG animation, that kind of thing. So yeah, they would not compete for something that's more gig. Um, and then in terms of your LinkedIn question, LinkedIn is a very different business model. It is a professional social media network for professionals, and they mainly work with like the job postings that are on LinkedIn are mainly targeted towards firms that are looking passively for full-time hires and primarily for full-time hires. So where there wouldn't be an overlap is there wouldn't be an overlap in the dispatch workers. So no firm looking for temporary workers would go on LinkedIn. There is an overlap in placement, and I think for this one it is a time and convenience delta, meaning if you're willing to put up a job posting, wait a couple of months, screen qualified individuals, and finally get to it, it might take 3 months for you to find a candidate. Whereas if you trust CR and their talent and who they've already screened, then maybe it's a faster process. This is an assumption. I'm not exactly sure. I would assume the CR has, uh, people ready to go at a faster notice, right? So you decide, do you want someone faster full time or do you want someone slower full time? And then the production, you would not go on LinkedIn for the production projects. So yeah, that would be a more different business model, but it is in competition with that, meaning someone would be like, hey, I don't want to pay you that premium for that convenience premium for a dispatch that happens in a week or something like that. I don't mind waiting 3 months because now I can save on that premium. So there is that competition. It just depends on which one the client wants. Um, what were other parts of that question? So I did the first
I think
two.
you answered
Yeah.
it very well. I mean,
Mm-hmm.
you in your post on Substack, you mentioned that the agency business had flat revenues despite rising wages.
Mm-hmm.
So there
Mm-hmm.
might
Mm-hmm.
be, on the margin, a little bit of a decline, I suppose, in volume terms.
Yeah. 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 Yeah.
So who's taking market share? Is it due to some longer term shift in technology or something else in the industry?
Yeah, I did dive into that question that you posed quite deeply, and it's there's multiple variables to address that question. One is there's definitely a lot of competition. There's different ways in which people have innovated in the HR management realm. You mentioned another company called BizReach that primarily filters has a really high quality control and filters for very highly ex like professionals with really high expertise, and so that when someone goes to BizReach looking for like an accountant or finance person or executive, they know that they're getting someone of quality, right? So yeah, so they are competing with people who are innovating. But another thing is in terms of the agency part is that they are in fields where there is some type of decline, meaning, for example, TV shows. For example, legacy TV providers are competing with streaming services. They're competing with YouTube. They're competing with TikTok, even. So, any visual type of media, legacy is losing market share. And so, there's less budget, right? There's probably more budget for like higher priced, larger scale TV shows, maybe, and less budget for like experimental stuff, which they might have had more of previously. That's one aspect. Gaming in 2024, fiscal year 2024, Microsoft closed one of their really large gaming studios in Japan. Don't quote me an exact number. It was around, I think it was 19,000 like game developers got laid off instantly. And going back to your, you did touch on the previous question something about like labor laws, something like that. So in Japan, when you hire someone full time, labor laws make that full time employee very sticky. It's a very so Microsoft is not able to go in Japan and be like, I'm gonna lay off 33%, a third of my gaming developers. You can't do that. You're not allowed to do that. The firm actually has to be, I think, don't quote me on exactly, I think they have to be losing money for them to do something like that. But if Microsoft says, "Hey, we're exiting the Japan market completely," then there's nothing you can do. Then you can lay off all 19,000. But if they're profitable, then it's very difficult to lay off someone in Japan. Um, so that probably goes towards why CR exists, why Creek and River exists. Is you know, I don't want the long term cost of hiring someone and having them permanently in my firm. I'd rather pay for a temporary worker. So for this, side project, or I'm understaffed a little bit, so I'll just hire this temp worker to fill in that role type of thing. So that's kind of yeah. So yeah, going
Interesting.
back to the main question, why is agency revenue flat? So yeah, one thing is the slight decline in gaming, slight decline in TV shows. Um, I did have notes on this. Let me see.
That's okay. I think we
Hmm.
understand the broad
Hmm.
picture.
Hmm.
And it seems like they do have a place due to, let's say labor laws. It sounds a little bit like Accenture, but or a mix between CAA, like a Hollywood talent agency, and dispatch services um,
Hmm.
like Manpower, I should say. But so let's talk about their exposure. They have the exposure to TV production, I mean, production of TV shows and
Hmm.
maybe something else, gaming companies like video games, and also medical field. Could you give a
Right.
picture of the current exposure, what's growing and what's not,
So just to clarify, the question is what segments are growing and what segments are flat and not growing? Kind of
and also
okay.
give a picture of their current revenue exposure.
Exposures. Okay. Yeah, so Creative Japan has been flat since fiscal year 2023. Creative Korea has dropped slightly by 10% since fiscal year 2023. All these figures are based off of fiscal 2023. So medical field has gone up a bit, 7 to 8%. Professional field, their accounting and legal exposure has been flat. And a new field, which is CRES, it is their executive recruitment, consulting, and business succession. That has doubled, but that's because they're starting at a very low base. So growth has to be higher for a very small segment. They also have like AI, DX, and IT business. That one is also growing. So yeah, I'll address the biggest ones first. So TV. Yeah, so TV and movies has grown. So fiscal year 2023 it was 8 billion yen. Now it's at close to 12. So that has TVs and movies grown. Um, Games has also grown. So game development. So if we in terms of production, the company has grown their production revenues by 50%. Uh, I believe, since 5 years ago. So a lot of that production goes towards gaming because the company is sees a lot of growth potential in gaming, which is why recently, if I remember correctly, May of this year, they expanded into this building called MSC on Marion building in Japan. So that the first 12 floors or 11 floors of the building is aggregating all of Creative Japan's talent into one building. And so yeah, they're kind of like doubling down. So I think what that signals to me is that they see further growth in gaming. Web, I believe there's web development or web design that has also grown from 8.5 billion to 10 billion. Yeah, ebook business, YouTube business has also grown. New agencies. This has gone down. I don't know what is within new agencies, but that has gone down. So yeah, overall, Creative Japan has grown in those fields. But in terms of margins, I think this is where it kind of matters. Is that despite the growth in revenue that I mentioned, for TV and movies, margins have stayed stagnant, but then the operating profit, because revenue has gone up, the operating profit has grown. Gaming, there's a slight margin contraction. So I don't know if this is because this could be multifaceted. This could be either there is more competition for gaming developers, so they're able to, so the people that own the IP for the large gaming studios are able to leverage this competition into paying CR Creek and River less. Or there's something to be said about Creek and River getting some uh, portion of owning the intellectual property, meaning so later down the road, if the game does well, they get a portion like of revenue, royalty revenue. So I'm not exactly sure which it is, but there's some margin contraction. But I don't know if the margin contracted because they want more of that IP exposure, so they're willing to do projects for less. Um, that's part of it. Yeah, so I
Well,
think in terms of the creative field, I think they're yeah, that side is fine. Medical field, they're doing well. That's one of their biggest cash cows. Um, that one, I believe that they are slowly getting more and more market share. Their network of physicians have continued to go up. Um, what else is there? There is Creative Korea. So in Korea, they have like an outpost there. This has consistently lost money, but I think the thesis behind that is if by chance this lottery ticket hits and they're able to gain traction, then restarting, like recreating a studio in Korea later on is more costly than them keeping the current operations and losing a little bit here and there in hopes that something that they gain traction. So Creative Korea is not doing well. Professional field. I think this field is in the beginning I thought they would be okay. They were rather flat. So they are making money. They are earning money with the professional field. So professional field is accounting and legal, the lawyers. Margins are pretty low. They haven't really grown it since. And I think the reason why is because there's a comp that I looked at that is way better than them in Probably every aspect. Let me just bring that comp up.
But okay, I think we get a
Hmm.
pretty good picture now.
Okay.
But if you look at the performance of the
Hmm.
company, like EPS growth of 19% per year is
Yes.
just extraordinary. It seems like it cannot be explained just by exposure to certain industries or segments. It seems like they do have some kind of success, something that makes them able to take market share. It has
Hmm.
to be the case, right? So what do you think is the secret sauce?
Okay. Secret sauce is, I'll just use medical field as an example. That is the best case study for the business model in which Creek and River kind of is able to gain more and more market share in their agency business. And um, in the medical field, they have a fair and like a fair called the Resident Navi Fair, which is a fair that all um, like med school students would attend in order to either get placements for residents or for post graduation when they want to get assigned to a hospital, right? So how I frame this is they not only just want to create just be a middleman and just simply um, connect someone in their network, an employee to an employer. They also want to be viewed as a leader in that field. So yeah, so they host these events. They also have a magazine. So in terms of the medical field, they have a doctor magazine, physician magazine that they send on a monthly basis to all like any physician that wants it in their network as kind of like information, like the latest news and updates on being a physician in your field and how to kind of like stay on top of your skills as a physician as well. So yeah, so in terms of so they spend money to be an information source. They spend money to host these high quality events to help people gain gain employment opportunities. And so that's kind of like they have like this community effect. So they've done this in the professional field, accounting and legal. They've done this for architecture. They've done this for what else is there? Yeah, yeah. Basically, that's kind of like their blueprint to kind of capture more market share. Is that they not only just want to create a platform to connect employee to employer because anyone can do that. It's like how they differentiate themselves and get their name out there. I think they do a good job of doing that.
Magazine, industry
Yeah,
fairs. So,
yeah.
so
Hmm.
okay. What about, let's talk about the future then. What do you think is going to happen with the shift to AI? I mean, is it going to help them or not? Because obviously, I think you can probably produce a lot more creative output, more easily now with generative AI tools. Does that help them? Perhaps by reducing costs, or perhaps
Hmm.
they can do more with the same type of talent. What we say? What do you think?
Yeah, I think currently as it stands, if we look at the entire industry of agencies or a similar business model, SCR, the market has gone down because when the AI trade was going up, people were like, okay, if AI is going to be get to this level where it replaces humans, and we just need less employees altogether. So this entire industry took a hit. What differentiates CR from the rest of the baskets is that I think the decline from their core operations, if AI is a thing, is so gradual that um, because they have this mechanism of allocating capital to buy businesses, like they already bought Takahashi Shoten Group, which is planners, right? That's actually kind of a anti-AI kind of thing because people hate doom scrolling, so they kind of want to get back to like the old-fashioned write in a planner type of thing. So
Hobonichi is doing really well. I mean,
yeah,
that
yeah,
stock has
yeah,
been
yeah.
a stronger performer.
Yeah, when I go to Japan, I'm gonna buy Hobonichi just as like market research purposes as well. But I personally do enjoy like writing in a planner because I feel like it makes me actually there's actually something at stake. It feels like I'm actually like by writing it down, uh, I need to do this thing. But if I type in Google Calendar, it feels like less real. I don't know, just my feeling. But yeah, going back to answering that question on AI is that um, currently for the high skilled professions that they're in, um, sure, like even in coding right now, you have AI to help with the coding process. Um, I feel like the decline, we haven't actually seen a decline in some of their core fields, like Creative Japan is still doing really well. So I think if there is a decline and it comes, I think by the time that it actually permanently, like, really screws the entire labor force or a lot of their core operations, they would have already diversified away from it. That's kind of like the bet I'm making. But you can make that bet because the company is trading so cheaply, like 4 times EBIT, like 1.5 times, 1.4 times price of book. So
Do you think that
um,
that's why is that why the stock trades at 7 times P because of fears of AI disruption?
I think the market has decided to short that entire basket. I think that's why, and they lumped CR into it. But if you look deeper and you look at the ways that they can allocate capital, which all the other ones don't have, because all the other ones are also trading 4 to 6 times, but none of them have this ability to allocate capital. I forgot to mention one point. They also have their own AI DXIT division that helps with consulting for these other firms. They have something called a DX Forest, which they represent AI companies with their tools. I believe what that business model is, if I go into a company, someone hires CR to help them with AI transformation, then they can pitch some of their tools to them, and they get some type of commission from um, selling those tools. So if A is a thing, then this AIDX IT division should do really well. And I noted in my pitch that right now AI consulting is also a very, very good business, and that people with knowledge of how to do the transformation, consulting at a really high hourly rate to these big corporations that are legacy businesses is a phenomenal business, and it's a super high margin. So yeah, if AI takes off and people are accelerating transformation, this portion will do well. Um, in addition, because they're getting more and more experience with the AI transformation by doing these consultations. When they buy a new business that is a legacy business and is behind in terms of the AI, the tech, or the DX, then they can also assign their own professionals into these newly acquired companies and increase their value by making them more optimized and efficient. So yeah, I think they have smaller hedges right now. They're not like that big. They're not that large. But I think if it goes up, there is this counteracting force. There is something there.
How are you so sure that the M&A is going to be lead to, earnings accretive growth? Or earnings like how they're gonna add value through M&A? Because M&A is tricky to do, I would say. You often end up in bidding wars and end up paying too much, at least if you go through advisors like investment banks. But you think that their capital allocation is actually quite decent. What makes you say that? Or can you describe their M&A strategy overall?
Okay. So I don't have a firm conviction in terms of whether they will overpay in the future or not. I think that at their current valuation, Um, okay, there's a couple of building blocks here, and how I view this. So one with the CRES field, their business and succession consulting business, where they actually have a network of executives, CEOs, CIOs, CMOs, CFOs. Last year they did 240 consultations to businesses that require business succession. So that, in my opinion, is organic deal flow. These are people like, hey, maybe like I don't even know if I want to get acquired yet. Let me go to CR and get some consultation to see if this is something I should consider, right? And then CR being the first person to see this potential deal is like, yeah, I think that, you guys getting acquired is, a great idea. So here's my offer, right? So every year they get, well, that this number of consultations will only grow in the future. Right now it's 240, maybe next year it's 300, maybe the next year after that is 500, right? Um, and then the thing is, executives know other executives, so like that there's like this also effect of how their executive network will probably naturally grow as well. And then there's word of mouth. It's like, hey, have you considered, getting acquired by CR in the future? Um, so if we look back at the Takahashi Shoten Group, that one they acquired for 13, 14 times EV EBIT. My opinion is that they potentially overpaid for that one. There are some synergies with CR in that now they can, because they have rights management. So, um,
What did they
be,
do?
oh yeah,
Takahashi Shoten.
Takahashi Shoten Group is a publisher. They also have the largest market share for physical planners in Japan. They also do calendars that are either on your wall or on your desk. They also publish books, so they have some like hit titles. I think one was like something about animals that's like really cute and that sold like a million something copies. So yeah, they definitely have shelf space in libraries. Oh, sorry, not libraries, bookstores. So the basically the kind of potential synergies is because another segment of Takahashi Shoten Group is they have these employment guides. Whereas any new graduate that has to go through a corporate interview and do those exams and go through that interview process, which is something very unique to Japan. I don't want to do that in Canada. But basically, they publish these employment guides on how to like pass these exams, how to pass these interviews, that sort of thing. So
Like Vault
because
Finance Guide.
yeah. Because Creek and River has history of being in these professional fields, they could make specialized employment guides. So that's like one of the potential synergies is that they can branch off from generalist employment guides to more specific employment guides, like how to like what's the job hunting process to be a doctor, that kind of thing, and that would further entrench them into the minds of employees, right? Because we talked about the community effect, so having these employment guides would probably bring their view as being a leader in the space even higher. Um, yeah, so that's like the potential synergies. Is it worth 13, 14 times EV EBIT? I don't know because like their margins, their operating income hasn't really improved in since the last 4 years. So, but it's probably a stable business, but it's hard to say. It's hard to say. Maybe there's like a renaissance of people actually really enjoying fiscal planners. So a lot of people are going. This doom scrolling thing is makes their earnings even higher in the future. We don't know. But that's why I said I don't have complete conviction on whether they would do a, good, like accretive acquisitions in the future, because in this one I feel like they slightly overpaid. It's fine. I think they paid a fair price, maybe a little bit too much, but even if they did repeat this process and do more Takahashi Shoten groups, I think it was fine. It would still grow their earnings, and hopefully, because they do have an expert network of CEOs, CIOs, CFOs, right? I'm hoping someone be like, "Yo, do an acquisition at 7 times EV bid. That's very good for this company." I hope he has. I think he has people around him that can tell him that. I hope so, because if they do that, that would signal to the company like, oh, they can acquire at a creative multiples. So that would that would basically rewrite the narrative of the stock, and that would actually propel it further up. Um, yeah.
Can you talk about CRES Everlasting Story Group? This is a subsidiary, I suppose. What
Mhm.
do they do?
Yeah, so CRES, they do they started off actually a couple of years ago as an incubation program. I think it was more speculative in the beginning. So the company invested in like IP rights for like VR. They also did like NFT production for their rights management group, and then afterwards, I guess they kind of changed that. Everlasting is basically a signal for another way of like signaling the business succession part of businesses. So like and let's say you're like 7 years old, about to retire, or you're close to passing away and you want your business to everlast, last longer than you are alive, and there's no one in your immediate family that can take over the business. So the everlasting story part is this part. So that's where the business succession consulting comes in. They also can have a network of, if I remember correctly, 2,500 executives, which consists of former CIO, CIO, CEO, CIO, CMO, CFOs, that they can dispatch to your company to help you out to make some decisions or fill in temporary roles as well. Um, there might be some other like niche things that they do in the CRS, but the primary thing is business succession and also the dispatch function of filling in temporary roles. Yeah, and another thing I think that's
Yeah.
interesting is like Japan is undergoing a lot of like uh, there's more and more activity going on in terms of the M&A space. So typically what happens in these type of situations is executives could get laid off or replaced. So that creates more and more availability for CR to continue to expand their network of executives over time. And these people, I guess, would like to probably continue doing what they did before. So I think it is a good segment that they have built up for the future of their firm. Yeah.
So they bought back shares 2023 to 2025. It looks like they've now stopped their share repurchases, even though the share price is lower, or perhaps as a function of lower share buybacks. Why do you think they stopped buying back shares?
I think the main reason is because so they actually had, I looked into this, in January of 2025, they did announce a buyback program for 500 million yen. Um, and then in March of 2025, they announced the acquisition of Takahashi Shoten Group for 9.5 billion yen. So their excess cash basically took a large hit. So in terms of liquidity, they have less cash, less net excess cash. And if we say that the new narrative is, hey, we're going to be doing more acquisitions in the future, right? So now them having a net cash balance of 6 billion yen, they probably want to save that up for future acquisitions as well. So that's probably why they didn't continue and execute that 500 million buyback. Yes, it is cheaper, but if I were to think, okay, would I rather them buy back shares right now, or would I rather them um, do more acquisitions? I would think do more acquisitions, and kind of the more funny thing is by them actually not doing a buyback, it signals to the market that hey, they think that it's actually more is not worthwhile to buy at these low prices. Shooting the stock down is actually good for me because I can buy it at a lower price, um, in a way. But yeah, that the buy them stopping buyback program potentially led to the stock dropping even more, because hey, if you bought at 2,000 yen per share and you're not buying at the current 1,300, 1,400, 1,500 level, then what does that signal to the market, right? Signal to the market that like if we don't believe that is undervalued. But I don't think that's the actual signal. I think they're just changing their narrative and how they're going about acquisitions. So I think this creates a good buying opportunity. Yeah.
All right. So is this something that you think that we've missed? Anything you want to add to the discussion about Creek and River that we haven't
Oh,
discussed yet?
okay. Let me think here. Yeah, I'll just wrap out the investment thesis because we have bits and parts of it here and there. So I'll just like kind of put it all together. Creek and River is a company that trades way too cheaply just from a cash flow perspective. But of course, in Japan, being able to generate cash flow is not the only thing people are looking for because there's tons of companies in Japan that generate cash flow, but that cash just sits on their balance sheet with nowhere to go. I think the company has made it very obvious that they're going to be allocating that capital. They have opportunities to allocate that capital. As I said, they did 240 consultations last year. They're probably going to be continuing to do more over time. And so they have that organic deal flow. They have those potential deals coming in where they can say, hey, this is something that is of interest to my company. And so, yeah, they could do more acquisitions. So, I mean, the simple math is right now they have 6 billion of net cash. Every year they're generating around 4 billion. So in 12 months, they're going to have 10 billion of cash sitting on their balance sheet to make another Takahashi Shoten Group like acquisition, right? And the thing is, they don't even have to do acquisitions at the 10 billion level because of their size and scale, because they're a 30 billion market cap company. They have the size and scale where like if every year they make a 5 billion acquisition, that's like a pretty meaningful size in Japan where you could actually buy stuff at a even a lower market cap. And I think the unfortunate thing is from my research and the comps analysis is they got basketed up with the other specialized agency firms, and they just decided, hey, AI is going this way, and all these companies should just go down. But I think CR is a very good exception to all the other ones because they have this ability to allocate capital. And at these low prices, I think it's a huge asymmetric bet. Where even if they were to fairly play or slightly overplay, I think the stocks should still go up in that scenario. Yeah.
Cool. Yeah. Not an investment
Hmm.
advice, of course. Do your own
Yes.
research.
Yes.
But thanks you so much for doing this, Alan. Where can people go to find your work? I mean, you got a Substack, right? So
Yeah.
what's
Yeah.
the
Yeah.
name and website?
Yeah. First and foremost, I really want to say thank you, Michael, for giving me this opportunity to be in front of your audience. I really enjoy this interview and appreciate this opportunity. Hopefully, we can do more of these in the future. Yes, I have a Substack. It's also called Continuous Compounding. I'm on X. My username on there is Compounding Up. I guess we'll have this in a link in the description somewhere. Yeah, I also have a YouTube channel that's also called Continuous Compounding, where I do live streams of me actually like breaking down stocks or screening stocks. So that's a lot of fun. A bit of news is like later in around October and November, I'm going to Japan for 3 months. So I will be doing boots on the ground market research. So yeah, if I find something interesting, and for example, like in Japan, there's like these secondhand stores. So if I walk in a secondhand store, I can kind of like get a feel for the business model in person. So I think I'll probably make some video content while I'm there as well. So definitely subscribe to my YouTube channel. And yeah, I think in the near term, I'll also be expanding into looking at Korean stocks as well, because that's another area that looks very, very juicy, let's say. Um, but yeah, that's where you can find me. And again, yeah, thank you for this
Fantastic.
opportunity.
Yeah, thank you so much. And I'll also provide the links in the show notes to this video on YouTube. So thank you, Alan, and speak later.
Yes, thanks, Mike. Talk to you later.
Bye.
Bye.